Hey everyone, welcome back to We Are Cosmic, your go-to space where we decode the biggest shifts in finance, cryptocurrency, and the future of money. If you're new here, make sure to hit that subscribe button because what we discuss on this channel could shape the way you think about money and wealth in the next decade. Today, we're diving into something truly groundbreaking, the way blockchain and crypto are reshaping global finance. And trust me, what I'm about to share is happening right in front of our eyes, whether most people notice it or not. Now let's start with a quick reality check. Have you ever wondered why banks, big corporations, and even government financial institutions are suddenly talking non-stop about blockchain and crypto? This isn't just hype. This is real transformation in the backbone of the financial system, and the CEOs of some of the biggest banks in the world are openly admitting it. From Citibank in the US to UniCredit in Europe, and even big infrastructure players like Coinbase and Uphold, leaders are saying the same thing. The old way of moving money is outdated, slow, and expensive, and crypto technology is the solution. Here's a quick story to illustrate the point. The CEO of Citibank explained how their traditional system, which handles over $4 trillion globally every single day, is being rebuilt from scratch. Payments, deposits, foreign exchange, lending, they used to do all of these in a rigid, slow, and siloed structure, but now banks are moving toward modular services powered by APIs, tokenization, and real-time blockchain rails. This means money and value can move instantly, safely, and across borders, something that wasn't possible before without weeks of processing and mountains of paperwork. And this is why it's so exciting for crypto holders like us. Banks aren't just exploring this for fun. They're investing heavily and racing against each other to adopt blockchain tech because they can't afford to fall behind. The message is clear. If you're a bank and you don't integrate crypto and blockchain early, you risk being wiped out. The UniCredit CEO even stated that by 2030, the financial landscape will look dramatically different. Many traditional banks may consolidate or disappear, replaced by fintechs, digital-first banks, and blockchain-native infrastructure providers. But here's the real kicker. This isn't some distant future. It's happening right now. The Coinbase CEO mentioned that crypto adoption is an existential priority for the top financial institutions. That's strong language. It's like when the internet first arrived and companies like Amazon and blogs challenged traditional newspapers. Those who adapted early won. The rest fell behind. Today, blockchain is that disruptive force. And it's not just Bitcoin. It's XRP, Stellar, Ethereum, stablecoins, and all the underlying digital infrastructure that's making payments faster, cheaper, and more secure. Now, you might be looking at crypto prices and thinking, like, wait, this doesn't feel like a bull market? And I get it. That's normal. Markets fluctuate. But here's the point you need to understand. We're not just trading assets. We're witnessing a global system-level adoption of new financial technology. Banks, custodians, ETFs, digital asset treasuries, all of this is starting to converge. This is the flywheel of innovation starting to spin faster. And if you're positioned right now, you're at the beginning of a massive wave. You are seeing history unfold. Blockchain is no longer experimental. It's being institutionalized, legitimized, and scaled at an unprecedented speed. And on this channel, my goal is to break down exactly what this means for you, your portfolio, and your long-term wealth strategy in simple, actionable terms. If you're ready to see why banks are moving from 0 to 500 miles per hour on crypto adoption and why the next few months could redefine the financial world as we know it, stay tuned. In the next part, we'll dive into how tokenization and digital rails are literally rewiring global finance and why that matters more than ever for everyday investors like you. Let's talk about tokenization. You might have heard this word before, but here's what it really means. Tokenization is turning money, assets, or even complex financial products into digital tokens on a blockchain. This allows banks to move value instantly, 24/7, without relying on slow traditional banking systems. For example, instead of waiting days for a cross-border payment to clear through SWIFT, tokenized payments can happen in real time anywhere in the world. That's why CEOs at banks like Citibank are saying tokenization is the future of client services. Their clients want money to move fast, safely, and with less friction. And tokenization delivers exactly that. But banks aren't just experimenting. They're rebuilding the plumbing of finance. Historically, banks have done everything in a vertical system. Payments, deposits, foreign exchange, lending, and compliance were all tightly coupled. That system worked for decades, but it's slow, expensive, and rigid. Today, banks are unbundling these services into modular components, using APIs, real-time ledgers, smart contracts, and blockchain rails. This means banks can upgrade or replace parts of the system without rebuilding everything from scratch. Now, why does this matter for investors like us? Because the infrastructure is what enables mass adoption of crypto. Banks like JP Morgan, UBS, and even smaller fintechs aren't just dabbling. They're racing to integrate blockchain because they know that their survival depends on it. In fact, many top banks have made crypto adoption an existential priority. Coinbase's CEO mentioned that large financial institutions are going all in, treating crypto as a must-have, not an optional experiment. And remember, banks don't move fast under normal circumstances. They're conservative, slow-moving giants. So when you hear that they're accelerating crypto adoption at this pace, you know something huge is happening. Another key point is the infrastructure providers. Companies like Ripple, Uphold, Circle, and Coinbase are building the heavy lifting, connecting banks to multiple blockchains, stablecoins, and digital rails. Banks don't want to spend years building this themselves. Instead, they plug into these platforms and instantly get access to real-time global payments, tokenized assets, and compliance systems. This is why Ripple's XRP, stablecoins like USDC, and other digital assets are playing such a crucial role in adoption. They're the tools banks use to make blockchain work at scale. Let's also consider the generational shift. Younger generations like Gen Z and Gen Alpha are digital natives. They expect fast, seamless, borderless payments, like sending money as easily as sending a text message. Banks know that if they don't provide this experience, customers will leave for competitors who do. So the adoption of blockchain and tokenized money isn't just about technology, it's about customer experience and retention. Lastly, the scope of this change is enormous. Today, 9 out of 10 banks are developing blockchain solutions, and 2 out of 3 Fortune 500 companies are investing in these technologies. Over the next 12-24 months, we're going to see this adoption explode. This isn't gradual, it's going to feel sudden, almost like an overnight success story, but it's really the result of years of preparation and infrastructure building. The flywheel of digital adoption is spinning, and it's about to pick up speed. So, in summary, tokenization, blockchain rails, and infrastructure providers are completely changing how banks operate, and this is directly impacting the crypto ecosystem. If you're holding assets like XRP, Stellar, or stablecoins, you're positioned to benefit as banks integrate these technologies into mainstream finance. This is more than an investment opportunity. It's a front row seat to the future of money itself. Let's start with the basics. For years, crypto was seen as a niche or speculative investment, mostly driven by retail traders, people like you and me buying Bitcoin or Ethereum for potential price gains. But now, institutions are entering the market in a huge way. Why? Because the infrastructure is ready, and the opportunity to adopt digital assets is too big to ignore. Companies like Coinbase, Ripple, Circle, and Uphold are providing the tools and compliance frameworks banks need to safely invest and move these digital assets. This is what allows hedge funds, pension funds, and even Fortune 500 companies to participate without worrying about risk and regulation. One of the biggest game changers here is ETFs and digital asset treasuries. Let's break it down. ETFs, exchange-traded funds, allow investors to buy exposure to crypto assets without holding them directly. For institutions, this is huge because it simplifies compliance, risk management, and reporting. On top of that, companies are starting to use digital assets like Bitcoin, Ethereum, and XRP as part of their treasury management, which means they're holding crypto as a strategic reserve asset, just like cash or gold. This isn't speculation, it's corporate strategy. Here's why this matters for you as an investor. When institutional money flows into these assets, it stabilizes the market, creates demand, and increases legitimacy. Think about it. If a company like Tesla or a large bank treasury holds Bitcoin or XRP, it signals to the entire market that these assets are here to stay. This is the institutional adoption wave we've been waiting for. Prices may fluctuate in the short term, but the long-term infrastructure and demand are being built right now. And it's not just about individual coins. We're seeing a convergence of financial products built on blockchain, ETFs, digital asset treasuries, custody solutions, and smart contracts are all starting to interact seamlessly, creating an ecosystem where digital assets can be used for real-world applications like payments, settlements, and cross-border transfers. XRP, Stellar, and other blockchain-based tokens are becoming critical rails for these new systems, helping banks and businesses move money faster, cheaper, and more efficiently. The speed of adoption is also shocking. In the last few months alone, top banks have gone from almost zero exposure to hundreds of millions of dollars in crypto adoption per hour. That's not a typo. 0 to 500 million per hour is exactly what some bank executives have said about their crypto initiatives. This rapid integration shows that crypto is no longer optional for financial institutions. They are racing to catch up or risk being left behind. Now let's connect this to the broader market. With more institutions entering, the liquidity and market depth of crypto improves significantly. This means that as ETFs and treasuries increase their holdings, smaller investors benefit from more stable markets and better access. It also signals a shift from retail speculation to long-term strategic adoption, which is exactly what differentiates 2026 from the wild early days of crypto. Finally, this adoption isn't just limited to the US or Europe. Globally, banks, custodians, and fintechs are building blockchain and tokenization into their core operations. From interbank settlements to remittances and cross-border payments, the entire financial system is being rewritten to accommodate instant, secure, and compliant digital asset transfers. This is the stage where crypto moves from a trendy investment to a mainstream, essential part of finance. ETFs, digital asset treasuries, and institutional adoption are turning crypto into a legitimate long-term asset class. Companies are holding it, banks are integrating it, and infrastructure providers are making it scalable. If you're holding assets like XRP, Stellar, or Bitcoin, you are part of the early wave of adoption. And as institutions catch up, the opportunities will only grow bigger. Banks, fintechs, and blockchain infrastructure providers are all in a high-stakes race. Traditional banks like JP Morgan, Citi, UBS, and UniCredit are investing billions into digital assets, tokenization, and blockchain networks. They aren't doing this for fun. They know that whoever moves fastest and builds the best infrastructure will dominate the future of finance. On the other hand, fintechs and crypto-first companies like Coinbase, Circle, and Uphold are innovating at lightning speed, offering modular blockchain services, stablecoins, and wallets that traditional banks often struggle to build in-house. Here's why this matters. Banks can't afford to spend years building blockchain systems internally. Every blockchain network is different, written in different languages with unique protocols and security requirements. It can take months to integrate just one. So banks are increasingly relying on infrastructure providers, companies like Ripple, Uphold, Circle, and Coinbase, to do the heavy lifting. These providers allow banks to connect to dozens of blockchains, multiple stablecoins, and digital rails without starting from scratch. Essentially, they provide the plug-and-play solution that accelerates adoption. Now, this is where XRP and other digital assets come into play. XRP, Stellar, and USDC are key rails in this global system. They are the tools that allow value to move instantly, securely, and cheaply across borders. Think of them like the highways of the internet of money. Banks and institutions can use these rails instead of building brand new roads themselves. This is why XRP adoption is rising quietly but steadily, even when retail traders may not notice it. Another important factor in this race is multi-chain integration. Experts predict a world where hundreds of blockchains coexist, each optimized for different use cases. Banks can't integrate all of them manually. It's too complex. Infrastructure providers solve this problem, offering banks access to multiple networks at once, which ensures they can meet client demands for fast, secure, and flexible services. This is crucial because clients today expect seamless, borderless financial experiences, especially younger generations who are digital natives. Let's also talk about speed and efficiency. Traditional banking systems often rely on batch processing, store and forward settlement, and siloed compliance processes. That means transactions can take days to clear. In contrast, blockchain-based systems allow real-time settlements, smart contracts, and automated compliance, drastically reducing friction. Banks that don't adopt these new technologies risk losing clients to competitors who can deliver faster, cheaper, and safer services. There's also a geopolitical angle. Countries and financial hubs around the world are racing to set standards, regulations, and infrastructure for digital assets. From the US SEC pushing for regulated frameworks to Hong Kong's leadership exploring full blockchain settlements, governments are recognizing that digital money is the future. Banks and fintechs that fail to keep up may not just lose market share, they may be unable to operate globally in the new system. Finally, the consequence of this race is clear. The adoption flywheel is spinning faster than ever. As more banks integrate blockchain, more infrastructure providers get connected, more tokenized assets are used, and more institutional money flows in. It's a self-reinforcing cycle, like a snowball rolling downhill, gaining momentum as it moves. XRP, Stellar, USDC, and similar assets are the wheels of this global financial revolution, and being positioned in these rails now puts you ahead of the curve. One of the most exciting trends right now is that crypto is no longer just for speculators or tech enthusiasts. Top financial institutions, custodians, and even government-backed entities are integrating digital assets into their daily operations. Banks are creating new products, fintechs are offering easy access to tokenized assets, and companies are holding digital currencies in their treasuries. This is a system-wide shift, not a niche experiment. For everyday investors, this means that crypto is moving from a risky side project to an essential component of the global financial system. Now let's talk about CBDCs, or central bank digital currencies. CBDCs are essentially digital versions of a country's official currency built on blockchain technology. Countries like China, the US, and the EU are actively exploring CBDCs because they allow faster, cheaper, and more secure payments while maintaining regulatory oversight. Imagine a world where sending money across borders takes seconds instead of days, and governments can track and regulate transactions without the friction of old banking systems. CBDCs are going to accelerate crypto adoption because they create infrastructure and familiarity for both consumers and institutions. Here's the key takeaway. As CBDCs roll out, they don't replace cryptocurrencies, they complement them. Stablecoins like USDC or digital assets like XRP act as bridges between the traditional financial system and the new digital economy. Banks can settle payments instantly using these digital rails while still maintaining compliance with regulations. Essentially, CBDCs are paving the way for mass adoption of blockchain and digital assets without forcing institutions to abandon traditional finance entirely. Another important factor is the changing expectations of clients and consumers. Younger generations, Gen Z and Gen Alpha, expect instant, seamless, and borderless financial services. They are digital natives who don't want to wait days for cross-border transfers or pay high fees for international transactions. This is exactly what blockchain, tokenization, and CBDCs solve. Banks that fail to meet these expectations risk losing clients to competitors that can deliver faster, cheaper, and frictionless experiences. We're also seeing crypto assets gain legitimacy as an institutional asset class. Bitcoin, XRP, Ethereum, and other major tokens are being used not only for trading, but also for payments, treasury management, and financial innovation. ETFs, digital asset treasuries, and regulated custody solutions are bridging the gap between traditional finance and crypto, making it easier for institutions to participate. This growing legitimacy creates a positive feedback loop. As more institutions adopt crypto, mainstream adoption accelerates, which in turn encourages even more institutions to enter the space. It's important to remember that this transformation is happening fast, but not overnight. While retail investors might see price fluctuations and get discouraged, the bigger picture is that the financial system itself is being rewritten. Digital assets, blockchain infrastructure, and tokenized systems are quietly being integrated at scale. And by the next 12 to 24 months, this shift will become increasingly visible to everyone. Finally, let's connect this to your perspective as an investor. If you're holding XRP, Stellar, USDC, or other major digital assets, you are positioned at the front edge of adoption. The combination of CBDCs, institutional adoption, and digital rails means that the demand for these assets is not speculative, it's structural. In other words, this is about the future of money itself, not just short-term price movements. So, in summary, mainstream adoption is here, CBDCs are accelerating the pace, and cryptocurrencies are being integrated into the core of global finance. The world is moving toward instant, borderless, and digital money, and those who understand this trend now are strategically positioned for the next wave of adoption. Let's start with the big picture. The world is entering a once-in-a-lifetime transformation of finance. Traditional banking systems, which have operated the same way for decades, are being rewired from the ground up. Payments, settlements, and money transfers that used to take days are now moving in real time thanks to blockchain, tokenization, and digital rails. Banks, fintechs, and infrastructure providers are racing to build these systems, and digital assets like XRP, Stellar, and stablecoins are the critical highways of this new system. Why is this so important? Because this is not just a trend, it's a structural shift. Unlike past speculative booms, what we're seeing is the adoption of a new financial architecture. Central banks are exploring digital currencies, institutional investors investors are holding crypto in their treasuries, ETFs and digital asset products are becoming mainstream, and infrastructure providers are connecting banks to dozens of blockchains in real time. This is a full ecosystem, ready to support billions of users worldwide. Here's the practical takeaway. If you're in crypto, this is not just about short-term price gains. It's about positioning yourself in a long-term structural trend. Assets like XRP and Stellar are not just tokens. They are rails that banks and institutions will rely on for the next generation of global finance. As adoption accelerates, these assets will become even more essential, making them a core part of the digital economy. We've also seen that timing matters. While retail investors may panic or sell during short-term price swings, the real growth comes from systemic adoption. The flywheel of blockchain integration is spinning faster every month. Banks and institutions are implementing these systems, clients are demanding instant, borderless payments, and infrastructure providers are making this technology accessible. This means that long-term holders are positioned to benefit as adoption scales. Another key point is diversification within the crypto ecosystem. The future isn't about one single blockchain or one single coin. It's multi-chain and multi-asset. Different blockchains will serve different purposes, from payments to decentralized finance to tokenized real-world assets. Being strategically invested in established rails and infrastructure-friendly tokens is a smart approach to navigate this new financial system. Finally, let's talk about strategy. Here are the takeaways for anyone watching. Think long-term. This is about decades, not days. The adoption of blockchain by banks and institutions is structural, and short-term price fluctuations are just noise. Focus on infrastructure and utility. Assets that act as rails, like XRP, Stellar, and certain stablecoins, are the foundation of this system. These are likely to see growth as adoption spreads. Watch institutional adoption. ETFs, treasuries, and regulated products are signals of legitimacy and real demand. Follow where the money flows. Pay attention to global trends. CBDCs, fintech innovations, and multi-chain adoption are reshaping how money moves. This will define the next generation of winners and losers. To sum it all up, the crypto revolution is real, it's happening now, and it's accelerating. We are witnessing a historic shift in global finance, and those who understand it early and position themselves strategically are the ones who will benefit the most. So, if you've been following this channel, now is the time to stay informed, stay patient, and stay invested in the right assets. The world of money is changing fast, and we are all lucky to be living through it.